The following is a presentation of TFNN.
11 Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the April 28th marvelous Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the newsletter that is the intelligence for creating your financial freedom. Hope everybody out there had a great weekend. I know I did. My outcome today, as always, is to teach you how to master the tools for trading. And, you know, that includes the tools of the mind, because our mind, yours and mine, it's the one thing that we can control. So let's go look at one of our tools. This is the tool I call, when you rule your mind, you rule your world. You know, great teachers down through the ages, they've described the importance of our mind and the importance of being a master over our thoughts. Buddha said it like this. He said, the mind is everything. What we think, we become. And each of us, you and I, each of us has the most incredible tool, the power to alter the attitudes of our mind. You know, maybe we can't control what comes in, but we most certainly can control what we do with our thoughts. The best place to start each day is with a positive attitude, because positive thinkers can accomplish anything. Zig Ziglar, he had this one expression, a saying out there. He said, your business is never really good or bad. It's either good or bad, right between our two ears. You know, folks, our thoughts are most assuredly things. Our thoughts are conceived in the mind, and they travel through time and space like ripples in a pond. And as you and I know, ripples affect everything that they touch. Our thoughts, they are our building blocks. The world we see is the one we have created with our thoughts, and it is our mind that is the GC, the general contractor. It is Marvelous Monday, folks. Rule your mind and rule your world. Stay positive and go build an incredible life. Welcome to the show. Let's get things kicked off here. Right now, we've got Dow Futures. They're trading up 40 points, trading out at 16,364. S&P Futures up 3.25 points, trading at 1863 and a quarter. NASDAQ up about 6 points, trading out at 35.36. Russell 2000 up a couple points, trading at 11.22. A lot of movement out here in the euro. We'll go take a look at that. Goldilocks is up $2 right now, trade out at $13.02. Silver back a nickel, trade at $19.63. Light sweet crude trading out at $1.01. That's up 40 cents right now. Quick peek across the globe. What do we have out here? You got the DAX in Germany up 22 points. FTSE up 5. Over in Asia last night, it was a sea of red. You had the Nikkei down 1%, off 141 points. Shanghai was off 34 points, 1 at 0.6%, and the Hang Seng off 91 points, about 0.5%. Our call-in number, 877-927-6648. Give us a call, folks. Happy to field your questions. Of course, you might be saying, hey, futures are up. What does that mean? Is that a good thing? Is that a bad thing? Well, I don't know. Let's go take a look. Let's go take a look at, what should we start off with? Let's start off with a 30-minute chart out here. Let's put this up. Here's the S&P futures. What did we have take place on Friday? What we had take place on Friday was we had price move down and get into an extreme oversold condition. Let me go ahead and put my crosshair, my cursor out there. What do I mean by that? If you're watching us on TigerTV, and thanks so much for doing so, what you're looking at is a chart of the S&P futures. You're looking at a 30-minute contract out. You're looking at the Rhodes Momentum Indicator system that's out here. If we take a look at the time frame of 11 o'clock in the morning, so it was right after the, this is Friday now we're taking a look at, right after the Nadex Bull-Bear Binary Option Hour. The bottom of my screen here, that's the relative, there's a little red squiggly line that you're looking at. That's a relative strength indicator. It's a momentum indicator out here. You know, much like a rubber band, if you took a rubber band, if you had a rubber band at your desk, wherever it is you're sitting, maybe it's in your car, whatever, and you took that rubber band and you stretched it as far as you can, at some point in time during that stretch, it's going to snap, isn't it? Sometimes that's referred to as a snapback rally out there. Perhaps that's where the expression comes from. I can tell you, when you take a look at momentum, you can only stretch it so far before there has to be some way to work that off. What do we call that? I call that being overbought or oversold. When the rubber band stretches to that level, what you then start to look for is, hey, does the market make a lower low, in this case here, and then does it come back and make a lower low? And does it do that with less relative weakness out here? Does it do it with more weakness? If it does it with less weakness and you get a reversal signal out there, it tells you, you know what? That's where you should expect to see the bounce. So everything that has taken place thus far should be expected. Because what took place at 11 o'clock in the morning, again on a 30-minute chart, we got our lowest RSI reading for the day. It's where the rubber band absolutely stretched out. Let me see if I can get a reading right here real quickly for us. It's not going to show up there. I can do it this way. Let me put this little table up on the screen. There's a data series. I just have to figure out where the heck no, I didn't want to do that. Where is it? Right here? Is that there's my data box. Okay. It's on a different screen out here. But what I can tell you is the relative strength reading. Oh, I got to expand it. Boy, it never goes as you want out here. Okay, relative strength reading down there, 20.36. Now, above 70, overbought. Below 30, oversold. So it gets to 20.36. What's the market do from 11 o'clock on? Really starts to move sideways, bounces a little bit. Never gets outside of that big down thrusting candle, though. Never gets above the high. The high of that session, by the way, that was at 1863. Gets up and it tests that area, and then that was right at about the time frame of about 12:30, and then whoosh, all the way down. Now, as it was making a lower low coming in at the 3 o'clock time frame, it was doing it with what? It was doing it with less relative weakness out there. In fact, the reading got to a low of about 23.85. So 23.85 versus 20.36 out there. So what we have seen take place here in the overnight session, we've seen what? We've seen that oversold condition get worked off. In fact, get worked off to the extent where it got to where? It got all the way back up above the 70 level. It did that here at 5 o'clock this morning. Since then, we've just seen a market that's kind of moved sideways, moved a bit lower out here. So right now on a 30-minute chart, we're really in mid-stroke out here. In fact, we're in such mid-stroke out here that the markets could actually move a bit higher. I have not seen what I would like to see, which would be a bit of a bearish cross out here. If I take a look at retracement levels, let me switch over to a different chart out here. Let me pull up the different 30-minute chart. Let me see if I can find that real quickly here. We'll just have to change the time frame on this. Give me a moment to do that. Just a little bit easier for me to draw the retracements for you. So what we can also see out here is off of that low that came in at the time frame here of 3 o'clock on Friday. We can see an A to B equals CD pattern that completed the upside. That price projection, 1868, actually got up to, 1867.50, 1867.75. Not too shabby out there. Now, we can also see up here at the highs where it created this little shooting star. Again, a 30-minute chart that we're looking at. This coming in at 9 o'clock in the morning. This was on on April the 24th out here. You had another price relative strength divergent pattern. So we had one at the top. We've got one down here that formed at the bottom as we took a look at that. So these are really important patterns to be, you can work on all different charts out here, all different time frames. So they are patterns to be paying attention to. Of course, you need to really understand how to trade these patterns out there. In fact, if you'd like to do that, I've got a full-day workshop. Full-day workshop gives you the whole kit and caboodle, lays everything out for you. If you click on my name, Steve Rhodes, on the homepage of TFNN.com under the 9 o'clock show, it'll take you to my homepage. You can go, you can see the workshop that's on there. You can send me an email, Steve@TFNN.com out there. Would love to be able to teach you about these patterns, how they work. Now, the key level here, the market is, just so we're clear, so I just wanted to make sure I laid out, hey, what's going on inside the market? The bounce should have been expected. Just simply having stretched that rubber band to the extent that it did. So now you come in, futures are up. Now you get the understanding as to why the futures are doing what they're doing. Of course, that's one of the reasons that they are doing what they are doing. The other reason out there, as you know, because of the currency pair, the euro, Japanese yen. That is the carry trade out there. That is the currency pair to be paying attention to. What do we have with the euro, Japanese yen? As you can see here, right at about the time frame, about 1 o'clock this morning, it started to move north out here. Now, this is not the U.S. dollar, Japanese yen. This is not the euro-U.S. dollar. This is the euro-Japanese yen cross pair out here. This is the currency pair that tracks our markets better than anything else. The euro-Japanese yen started moving higher. What did our markets do? Our markets also started moving higher, getting a little bit more oomph to that oversold condition that they were working in out here. So that's what's going on inside the markets. Can the markets move higher? I guess I was going to give you a couple areas of retracement. So let me go back and do that. We'll pull that out on the chart out here. So you just need to remind me, what was it that I started to do? If we go from the swing point high on the 30-minute chart, 9 o'clock in the morning, April 24th, down to the low that came in at 3 o'clock in the afternoon, what we'll see is we're right around the 0.382 retracement level. But it's not unrealistic to think that the ES Mini wouldn't get up to about the 1871 level. Look, if it gets above 1878.75, if it does that with conviction, then the move to the downside could in fact be over. But until that takes place, all that we're really seeing out here is a bit of a counter-trend rally. So the numbers to be watching for inside the ES Mini, 1871 and then ultimately 1878.75. Let's go check out, see what's going on inside of Goldilocks and silver here this morning. Gold trading up $1.40 right now. On Friday, as we took a look at gold, we took a look at what? We took a look at a descending trend. We said if gold can get above that, in this key reversal session that took place here on April 24th, that may be real out here. And we're taking a look at a trend line now, not a channel line. We're taking a look at a trend line off of the top from March the 17th, that high, 1392.60, all the way down to the next high that had formed out here. This is after making a retracement. This is after breaking through a rising price channel. That was on the trading session of April 14th, that high out there at 1331.40. You go from the top of that candle to the top of this candle out here, and you'll see that right now price is traveling right at that area. So as we speak right now, Goldilocks threatening to break out, but it has not done so. If it can break above that level, then its next area of resistance, it really has two. The first one's going to be the 200-day exponential moving average. That's priced at 1324.70 as we speak. And then it's going to be all about, can Goldilocks get back inside the rising price channel that it formed back here on December the 31st out there, or does that act as its resistance point? But right now, it's trading right up against resistance. Let's take a look at silver. See if silver is doing the same thing, see if there's some synergy. Now, in the case of silver, we were unable to use the same swing point because it's dancing to its own tune out here. As we take a look at silver, though, if we use the trend line coming off of the March 14th high, that's at 21.79. And then we use as our next high out here, April the 10th out at $20.40. We'll see that silver really trading right on that number as well. The other thing silver's trading into all the way back here into June 28th. 2013, $19.63. Silver needs to break above that horizontal swing point as well as this trend line out here. 877-927-6648. It is Marvelous Monday. Welcome to the show. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So if we went back and I don't have gold or silver back up on my chart, but just to be clear, both of them really up against their resistance. So the best position at this stage here is to remain neutral. We know what you're looking at as far as gold or silver being able to break out of its trend out there. Of course, well, when you see a break of a trend, you like to see it with conviction, not a small-bodied candle out here. Talk about trends. Now we can switch over. We are looking at light sweet crude. This is the June contract out here. And what we can see is a nice rising price channel coming off the lows here from January 31st out there. Now, in this case here, we are taking a look at the price channel. That means we are looking at the bodies of the candles out here. We've got at least 3 connected opens and or closes coming off of the low out here from January 31st. And you can see that light sweet crude as it had pulled back. And this is going to be important because light sweet crude has been in a nice rising, this is a short-term rising price channel out here. But nonetheless, it has been in it. This is the first threat of potentially breaking through that area to the downside. The low so far today, 100.49, you'd have to say. And if we take a look at retracements as well, a break of that area, and then all of a sudden we're beginning to see a change in trend in black gold, Texas T, light sweet crude out there. 100.42 happens to be the 0.618 retracement level as well, and that is a retracement level coming off of the swing point low from April 2nd. that price point at $98.15 up to the high that was put in at $104.10 on April the 16th out there. So expect light sweet crude to be finding support here. If it breaks through that area, that will be sending quite a picture out here. I can tell you that. And I told you this last week and really the week before that and even with everything that's going on over in Russia, Ukraine, and what have you, and it's been this way for quite a while. In fact, when the whole Russia-Ukraine thing flared up, I gave you my hypothesis. That hypothesis was that the financial tool of mass destruction was driving the price of oil downward out there. That would put quite a bit of hurt inside of Vladimir's pocketbook out there. Now, it was fairly easy for me to suggest that because part of the basis behind that was the net short position of the large commercial traders out there. Every Friday at 3:30 p.m., the CFTC releases a huge set of spreadsheet data. So if you're spreadsheet whiz, it makes it a little bit easier to sift through the information. Everyone looks at it a little bit differently. I take a look at it as open, and I take a look at it as net short positions for both the commercial traders, the big money, as well as what's called the non-reportables. That's guys and gals like you and me out there that the CFTC says we're too small. We're just simply mashed potatoes out there. But what's interesting about the non-reportable group, they are folks that usually come to the party. You know what they are. You know some of these folks. They come to the party and they stay too late. They don't leave even though the masses have left. That means inside the trade, they typically stay in the trade a little bit too long. But right now, I can tell you that the big money is betting on light sweet crude moving to, they've never been at this level of net short positions inside of light sweet crude. Does that mean that light sweet crude can't bounce from here and that it won't be able to break through this rising price channel? What I can tell you about the big money out there is they got plenty of money to just be able to take the pressure out there. I don't suggest you do what they do. I suggest that you identify a trade, you figure out what the stop should be and the exit, and then you just simply let it roll until you get some new information out here. Anyway, that's what's going on inside light sweet crude. We'll see what happens with this rising price channel. We knew price was going to come down and test that level. It most certainly has done that. We'll see where it goes from here. In the pre-markets out here, let's see, popping to the upside, I think as a result of a buyout here. Forest Laboratories to buy FurieX Pharmaceuticals, a bunch of consolidation going on inside of the pharma business. They close at $80. Looks like the price on that acquisition right around the $103 mark out here. You got AstraZeneca, AZN, I believe they're looking at doing a deal with Pfizer. They closed at 68. They're trading at 79. 70 out here. GW Pharmaceuticals. Here's our leaders dollar-wise in the pre-markets out here. GW Pharmaceuticals closed at $62. They are trading out at $68 out here. Of course, on the downside, we've got some pharmas leading the charge here on the downside. Not to be outdone, you've got Oncogenics Pharmaceuticals. It closed at $9.70, and it has taken a major haircut out there. Trading right now at $4.87. That is a 50% haircut, just like that. 877-927-6648. Looks like Newmont Mining trading to the downside. Last trade fired up at $25.18. It closed at $26.45. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 100 points. Trade out at 16,463. S&P up 7 at 1870 and change. Composite up about 15 points. Trade out at 4,090. Russell 2,000 up 4.5 points. Trade out at 1127. Apple up $2.70. Microsoft up 52. Google back 48 cents. Cisco up 10 pennies. Intel up 10. Leading the charge. The upside is FurieX. Pharmaceuticals up 28%, up $22. AstraZeneca up about $11. Charter Communication getting in on the fray, up $4.64, up about $3.50 out here. Shire PLC up $4. GW Pharmaceuticals $4.76. IBM having a good morning out, about up about $2.80, up about $1.50 out here. To the downside, we've got Netflix jumping in on the fray, down $8 off 2.5%. Baidu off $5 and change, down $3. Oncogenics Pharmaceuticals, OGXI off 53% right now. National Oil Well Varco, NOV down 5%. Sohu off 6%, down about $4. LinkedIn off $4. Amazon down about $3.80. New Oriental Education, EDU is a ticker symbol, down 9% here this morning. Yeah, 9% off $2.30. Mylan Inc., MYL, is the ticker symbol. They are trading down about 4% out here. Newmont Mining, I mentioned, They are trading off about 6% here, off $1.50. Let's go check out some of these stocks here that are popping and or dropping out here. Let's go check out some of these core stocks out here. Let's go see what IBM, Apple, Google, stocks like that are doing. Let's take a look at Apple here first. APL is a ticker symbol, up and above the resistance area now this morning here. That area of resistance, the 1-to-1 A to B equals CD, that really wasn't the resistance. Now, when you form a D point, we're talking A to B equals CD. When you form a D point as you gap up into it and with volume, really the signal there is that it wants higher price. That is not how you go ahead and complete a D point. So for buying and selling the D point, that would not be a D point really worth selling out here. Now, why was it resistance? Well, a couple different reasons. Number one, if you go all the way back on the left-hand side of the chart and you were looking at the December 5th downdraft session out there, the high of which is 569.25 out here, and you were to draw a line across, I'm going to go ahead and do that now. I'll go ahead and make a thicker line out there, make it a little bit easier. So there's your black line, your dark line out here. You can see as price came up and tested that area back on December 6th, 2013, acted as resistance. Gapped up into that level back on December 24th as the Santa Claus rally was underway all the way to December 31st. As you remember, that area acted as resistance. So it was a natural area of resistance. Now, old resistance could become new support. That is if Apple is able today to close above the high of 553.31. Now, if it does, it's not out of the woods. It's got some resistance back here at this swing point, which is at the trading session from December 3rd, 2012, 594.59. Very bullish if, in fact, Apple can get above that level. If we take a look at potential butterflies in Apple's stomach out here, we would take a look at the swing point high from December 6, 2013. We use that high, go down to the, let me grab it here. By the way, I'll give you what that high price point is. 575.14, down to the low of that little island reversal candle or island reversal formation that took place over about 6 trading sessions. That's the low of January 31st. That's out at 493.55. Right there at the top of that resistance level, that last area, last bastion of hope from a bear's standpoint. That's a swing point from December 3rd, 2012. That forms your 1.272 butterfly expansion out there. I'll go ahead and draw in that pattern so you can see what that looks like out here. So let's pull this down. Let's go ahead. Let's put this right up right there. So you have a 1.272 expansion. You've got a little bit over 1.272 A to B equals CD to the upside. And I would have to say I would suspect that that's where price is going to gravitate to inside of Apple, right around the 597 level out there. And then, and only maybe then, is that where Apple runs into a significant resistance. If we can get above that, then the 625 mark is where she would be headed to. Let's go take a look at IBM, see what it is doing out here this morning. IBM up a tad at the open. Some of these volumes don't look right. Let me refresh my screen out here. Come on. Why is this delaying a little bit out here? There we go. Now we've got it filled in. So in the case of IBM, downdraft session, pretty big downdraft session. That's on April the 17th out here, down with 11 million shares. It's inside of this. It's inside of the gap in essence, really right now. It's dealing with so it's really going between a sign of weakness and a sign of strength. The sign of strength that took place on March 25th, that level held. No, it did not. In essence, it held because the sign of strength out here really would have been the prior session. You go back and take a look at the low of the prior session. In that case here, March 24th at 187.37. So we might have IBM just kind of consolidate here for a bit. But right now it's struggling to get above the top of the current gap. That was from April 22nd's high, 193 even Steven out here. So far, volume on this little bounce this morning, 482,000 shares. Let's take a look at Visa. Let's go see what Visa is doing out here. Visa had formed a 0.618 Gartley buy pattern. Let me refresh my screen, get all the active data out here. There we go. So this thing had formed a nice 0.618 Gartley buy pattern, but all it was able to do of that pattern, remember 5 outcomes of any Gartley. In this case here, the 0.618, the 0.382 retracement, which is your first outcome, that's all that Visa was able to do out here. That says that looks like to me what Visa wants to do is come all the way back down and test this wide-ranging bar with high volume to the downside back in July 2013. Somewhere around the level of 170.99. I say that because it made the first outcome, and then here on Friday, what it did was it moved down with volume. So you had 9.5 million shares moving into its swing point, most recent swing point from April the 11th. That had 7.5 million shares. When you start moving down into a swing point, it says you want to go test the bottom. At this stage here, I would say more likely what it wants to do is really go test the bottom of that swing point from July 31st out there. That seems like the likely outcome for Visa. If we take a look at, let's go look at ExxonMobil, because that has been nothing but strong out here. But let's go see what does that strength actually equate to out here. I say that because the energy sector, the XLE, has been the one sector that has been on fire out here. If we take a look at the ExxonMobil first here, December 27th is its swing point high. That's at a price level 101.74. Volume out there, 10 million shares. It got in here this morning. So far, it's done 987,000 shares in about 12 minutes of trading. So volume not too bad out here. In order for the XLE to continue to motor on, it's going to need ExxonMobil to take out that December 27th swing point. The key numbers to be watching there, 101.74. It did make a slightly higher high here this morning, so the volume of 10 million shares is also important to pay attention to. If you get a close below 100.99, and it does it with less than 10 million shares today, you would have a rejection of a swing point with lighter volume. And it looks like, yeah, this is the first test of that swing point. Well, let me make sure of that. 101.74. Did we test it out here on? Yeah, you did. On April 17th. So that was 15 million shares going into 10. Okay, so that's why it's still up there. So it was moving into the swing point here. This is important. Let me draw a red line across the screen out here. So, and let me also do the volume on the bottom of the screen. Makes it a little bit easier for you to see what was going on inside ExxonMobil. And if you trade the energy sector, whether it's the 300%, the 200%, the 100%, whatever you're trading, make sure you are going over and taking a look at what's going on inside of ExxonMobil. Inside ExxonMobil on April 17th, it was moving into its swing point from last December, but it was doing it, as you can see, with volume out there. And said what? Even though it rejected it on price, it did not reject it on volume. Said it would be back up there to test it. Well, today is the test of that area. Only tested the lows so far, but the key to be watching now is the volume. Can it do it with less than 10? What was it? 10 million shares, less than 10 million shares. If it does that, then you'd have rejection of that swing point on a lighter volume, as well as a rejection of the April 17th little swing point out there. So that's important to be watching inside of ExxonMobil. If that's the end of the move, is there an A to B equals C to the upside? Let's go take a look at that here. Your A point, February 6th low, 89.25. The B point out here, February 21st to February 24th. I know I can get it out. That's at 97.25. Comes down here on March the 20th. Yeah, it completes the 1-to-1 A to B equals CD to the upside. So we've got the completion of that D point. No reversal pattern here as of yet, but it's got all the makings of the potential of ExxonMobil completing its pattern and then pulling back. Pulling back to where? One might say, well, if we just take a look at natural retracement levels, moving back to the 0.382 level, 96.61 would be a logical area. I'd have to say more likely 95, 99, 94, 31-ish might be the area where ExxonMobil could go ahead and pull back to. See what else, what other morsels do I have inside here? Let's take a look at J.P. Morgan. Look at J.P. Morgan as well as Microsoft. Let me refresh my screen out here, and let's just start from scratch hole out here. Let's delete everything on my screen and see what J.P. Morgan is doing. So J.P. Morgan looks like it's in the process of forming an A to B equals CD to the downside out here. Looks like it could be a rather large one. In order to do that, it's going to have to take out the swing point here from the most recent trading low at April the 15th. $54.35 is the number to be watching there. 26 million shares at that level. Right now today it's trading into it. It's done 2 million shares, 15 minutes of trading, so it's got pretty decent volume to the downside out here. If, in fact, that is the pattern that unfolds out here, it is a large A to B equals CD to the downside. That would actually take project price to about the $49 area. I'd have to say even less than that. Let's see, what do we have out here at $49? Really, you've got an entire set of swing points out here. The most recent one being June 24, 2013. So that's going to be a key level to be watching inside of J.P. Morgan. We'll just draw that horizontal line across the screen out here. If it breaks that, then you're looking at much lower prices, much lower than the 49.23 test out here. J.P. Morgan had some pretty decent volume, so it's going to need to really work through this. Now, it's not the swing point. So it had big volume on April the 11th out here. That April 11th there was 47 million shares moving into the previous swing that had 28 million shares. But it did make a lower low. A couple trading sessions later, that's at 54.35 area. That is the area to be watching inside of J.P. Morgan out here. I believe we had Bank of America. They were out with, that was something. Let me just take a look at Bank of America. Forget about what they were or they weren't out with. Let's just take a look at BAC. Yeah, gapping down here this morning. I believe they might have had some type of accounting issue that they were dealing with out here. Let's clean the chart out here. So Bank of America, let's see what it looks like. It has broken a trend here. Let's see if it has or it hasn't. This trend coming all the way back into the December 19, 2011 time frame. No, it has not broken a trend. So that is likely where Bank of America would be headed to. I'm using just simply a trend line from December 2011, right around the $5 mark. The next level to use as that trend right around 690, July 23rd, 2012 out here. Looks like that is probably where Bank of America wants to head back to, which is in around the $12-ish range. So it's breaking a swing point this morning. That is from April 11th, 133 million shares. It's done, it's breaking it with conviction. This morning. It has done 65 million shares. Let's take a look at the A to B equals CD down that Bank of America is now confirming to the downside. Yeah. So you've got a 1 to 1.272 A to B equals CD, and that's what I would suspect. This would not be one of the A to B equals CD patterns that fits in the 60% category of only doing a 1-to-1. This is more likely a larger than 1-to-1. And $13.43 is your 1.272 expansion. Looks like by the time price would get down there, it would be testing the trend line, taking you all the way back into the 2011 time frame out there. That's what it looks like right now for Bank of America. Let's go check out, let's see if I've got Amazon up here as well. Amazon down another $13 this morning. Let me see, do I have that inside this little tab out here? I do. So let's go take a look at the Amazon, see where Amazon is headed to. It's got some volume here this morning. Let me just refresh the chart, make sure I've got the active data feed out here. Oh, man, but yeah, big volume. Big volume, obviously, on Friday out here, 16 million shares. So that was taking out another swing point here. So you got multiple A to B equals CD down patterns inside of Amazon. The first one out here, you'd go to the swing point back on January 22nd. And that high was 408.06. The B point out here was on February 5th. Down at 337.73. Here's your C point out here on March 13th. Completed the 1-to-1 A to B equals CD. You've got another A to B equals CD pattern here that is forming. Let's go see where that is going to take price to. This is on Amazon, AMZM. Looks like, look out below. Looks like about 259 and change out there. Dow's up 64, S&P is up 1. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 92, S&P is up 5, NASDAQ Composite is up 5 points as well, and there's Schultze from Hogan's Heroes used to say, very interesting out here. Of course, I don't have that same flair of an accent as Schultze. What's very interesting, we're taking a look at the volatility index, the VIX index out here. Right now, it's priced out at 1447 out here. Well, what does that mean? Well, it's camping out right on the 50-day exponential moving average. So you got the market moving higher here. If in fact the VIX is able to close above this level, that level being about 1450, 1451 as we speak right now, that is not your bullish type outcome. It just would really, again, further signal counter-trend rally mode. Now, as long as it stays below that, it tells me that there's, plenty of liquidity in the marketplace. So our liquidity gauge of the VIX right now, it's just kind of sitting at that level out here. 1443 is where it's trading at. It closed above 1451 or so with any kind of conviction. No, that does not mean 1452. That would not be good for the bears out there, for the bulls out there. On Friday we saw enough net declining issues for the price oscillator, the volume oscillator inside of the New York Stock Exchange to dip back below zero. In order for the bulls to take control today, they'll need 389 or more net advancing issues. Right now, 500 net advancing issues. We've got advancing issues at about 1649, declining issues about 1145 as we speak right now. So those are two areas that we truly want to be paying attention to. If I switch over and take a look at the euro Japanese yen here, just an update before we go off of the air here for the first hour. That's continuing this 120-minute chart that we're looking at. Not really showing any signs of backing off here just yet. Of course, it might make a run to the top of its trend line out here, right around the 142.80-ish type range out there. Boy, if it does that, you'll see a bounce that will get to be a much larger bounce than the one that is ongoing as we speak here right now. So that, in summary, is what it is that we'll be paying attention to. It is the fight between the bulls and the bears. I can tell you the Russell 2000, the NASDAQ, they are the linchpins. They are the ones that are struggling. Indexes, they are struggling. They are in confirmed descending trends on a weekly, on a daily basis out here. But the Dow, the S&P 500, different story out here. If we take a look at the S&P, we take a look at the retracement just simply from Monday out here, or not Monday, from the low back on April the 11th to the high that was put out here on April 22nd. We take a look at Friday's move down, did not even make the 0.382 retracement, at least not as of yet. So, and it's still trading inside the swing point from April the 4th out there. And as long as that does that, the S&P 500 has not rejected higher price and says it could actually go test that 1897 level out there. So no matter which way it is you're trading, make sure that you're using stops out there. Folks, if you hadn't had a chance to test drive Mastering Probability, do yourself a favor. Go to the homepage of TFNN.com. Over on the kind of mid-bottom, you'll see my name. Click on it. You can test drive that newsletter, 30-day unconditional money-back guarantee. And, hey, as long as you're over on the homepage of TFNN.com, don't forget the Tiger Dollar promotion ends today. So you want to go out there and you want to go buy Tiger Dollars out there. That'll get you into Tom's class. He's doing 5 classes this week. Today's is archived, so if you missed today's, no problem. 8 o'clock to 9 o'clock each morning, how he takes a look at the markets before they open. Folks, it is Marvelous Monday. Thanks so much for joining me. Have a great day. Look forward to seeing you bright and early tomorrow morning. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.